We are back. We don't have a lot of exciting breaking news this week. We've got some important
It's a 4-day
stuff.
work week.
It is a 4-day work week. We got a good holiday weekend in. We are expecting some decent reports coming out on Friday.
Hoping they're decent reports, yeah.
We've got September officially here, which means it's rate cut season, y'all. And I don't know about you, but I'm excited.
So ironic. The month of fall is when rates begin to fall.
Yes. And historically, I'm curious on your thoughts. September historically is the most volatile month of the year for stocks.
Yep.
We're starting September off on a volatile note. We'll talk about that. We've got the election. We've got Fed rates coming. So I think a lot of people are bracing for more volatility. Maybe some people are pausing. I don't want to say pausing because that's never what you should be doing at the end of the day when it comes to trying to time the market if we're a long-term investor. You guys have heard us say that over and over again, but we've got a lot of interesting topics to dive in and get some thoughts and discussion around to help you on your wealth building journey. Why don't we kick things off with what reports are we looking at this week?
The main ones, and I think this might, normally the most important report that comes out for equities is non-farm private, non-farm and non-farm private payrolls.
And what do those tell us for those that don't understand what those
jobs.
reports?
They're a jobs report. They're a very accurate jobs report, though. They don't have a ton of loose strings to them, so they're a very easy way for people to forecast and indicate what's going on in the market. Too high, too many jobs added, that's inflationary. Too little jobs added, that's recessionary. I think that market's right now pricing in somewhere between 140 and 160. We're looking for a number not too much higher than 200,000, somewhere between the 150 and 200 range. And that's probably going to take the king as the most important report moving forward now again. So it's taken back its throne from CPI and CPE. I think people are now under the impression that CPI inflation is under control. So the market's kind of looking forward to a new metric to catch catalyst on because that's starting to fade as the more important one.
Got it. Now, I saw a lot of the jobs numbers that have been previously reported. I saw a recent article come out that the government and government jobs and hiring has really been a big kind of inflationary variable in strong job numbers. Private sector job growth as a percentage of total payroll growth fell to 38% in July, which is the lowest since the 2020 pandemic. And historically, every time the private payroll growth share fell below 40%, so of that total growth number, the private sector growth being less than 40%, that usually historically showed that the U.S. economy was in a recession. So obviously we're not in a recession, but with those private numbers being below that 40% threshold that historical data has kind of shown, what do you take anything away from that in terms of, I mean, obviously it just means is government getting bigger and more jobs, or what are we looking at when the government is really pulling a lot of the weight on the job growth?
Yeah, we don't want to see that. I can't really speak much to it more than how I understand it, but I know that we don't want to see the primary growth addition to the job sector being from the government, because a lot of times those jobs are temporary or replaced or revised, as we saw. So we like to see like jobs like you and I, that's small businesses. That creates payroll taxes, income taxes. It creates a lot of tax base. Government jobs don't create a lot of tax base. So that's not great for the economy as an overall, nor is it good for the government because it actually creates a drag on the government because they're going to pay somebody. So if we want to see private payroll sector, non-farm private payroll sector kind of boost up, and hopefully, like I said, around this time, we should see around a 200,000 number, and we don't want too much higher of a number than that, but around that number would be good.
So talking about kind of September being a volatile month, going into the election, usually historically has created a lot of volatility leading up to November. Your boy, Mr. Tom Lee of Fundstrat, said that I think a 7 to 10% pullback can happen over the next 8 weeks. We saw the S&P 500 has fallen negative 2.3% on average in September over the last 10 years, marking the only month with negative returns. Since World War II, the average September return has been negative 0.8%. And as of this morning, we saw U.S. production has fallen for the first time in 7 months. U.S. manufacturing has officially contracted for the 5th consecutive month, down to 47.2 points, which you kind of gave a little bit more perspective around that. We saw the Magnificent Seven stocks have now erased $550 billion of market cap. That's of today, Tuesday, the 3rd. So what are we seeing here in the market, and what do you say to investors that are looking at this from the outside in?
Welcome to investing. That's the first thing I say. If we kind of look back and we see where the market's at, we almost got back to the kind of peak where we were mid-August, and we're now back to like early mid-August, 13th, 14th of August levels, to where we've only given up about 2 or 3% of the rally, of the comeback rally that happened. I don't see it as a big deal. Something that's a good indicator of how much volatility is in the market is we always like to mention the VIX, the volatility index. Prior cutback, it spiked up to the mid 40s. We're sitting around the 20s right now, and we were sitting in the 16 range. So this is just a normal pullback. I know I said that last time, but again, pullbacks happen. They're a part of investing. We have to remember the last 7 of the last 8 months, the market's been in the green. So there's going to be some downward movement. And I think right now is probably the time where we should see it rear its ugly head more. I also posted today on my Twitter that I thought for the next 6 to 8 weeks, we would see some choppiness in the markets because we got about 62 or so days until the election. We have our first rate cut happening this month. Market's trying to figure out whether it wants to guess on 50 basis points or if it's going to be 3 straight cuts at 25. All the while, you have all this other stuff going on and a few geopolitical risks as well. It's an interesting time to be an investor. But historically, like you mentioned, September is a pretty flat or subpar month for long-term investors. It's a good time. And how I ended my tweet was, it may be a good time for dip buyers.
I was going to say
to get in and put some money to work that they have on the sidelines, because it's always hard to time and say, hey, was this 0.5%? Is this going to continue? When you got a 2 to 3% pullback on the major indices that we're tracking, it's probably a decent time if you have some dry powder to put it to work. Not saying that that's right for everybody, but for people that have discretionary funds that are just sitting in the bank, that interest rates are soon to go down, it might be a good idea to put those to work.
What are your thoughts on Nvidia? As of today, not only is Nvidia breaking records on their market cap and how amazing their, share price growth has been over the last few years, but today they set another record. They are down over $270 billion in one day, which is the largest drop in market cap ever. And it is down nearly 10% today in one day. Anything to be concerned about there? What is the result or reasoning behind this big pullback in the Nvidia stock? What were your thoughts?
I think if that was an important metric, we would have known the name of the company that had that prior, because that was held by somebody for some time, but I don't know who.
I'm curious.
Yeah, and so
maybe
that's obviously not an important metric, because in the short term, it's something to note and ooh and ah at, but long term, probably not a big idea. When I see pullbacks like that, especially ones of 9, 10, 12% in a company that has so ingrained in the current catalyst in the stock market, it kind of looks to me like an opportunity for
Meta.
There you go. Facebook.
February 3rd of 2022.
Oh, and go to the stock price. Put in Meta stock price February 2022.
So let's see here. They lost $232 billion in market value, the largest single-day loss at the time due to lackluster earnings report that fell short of analyst expectations and news of a decline in daily users.
Stock price was what, $70, $80 a share?
Let me see here.
I'm pretty sure it would have
Meta
been
stock price in, what did we save?
So in February of 2022.
Yep.
That's
February 3rd.
The stock price was trading at 300. We're going to call it 300 and February 3rd. About $250 a share. It's trading at $511 a share today. So what a good time it would have been to buy.
Right. So, I mean,
that past performance in a different company is not indicative of future performance in a different company.
Nice little disclosure there.
Yeah,
I like that.
I'm just like making sure that everybody knows that. Just because it happens once doesn't mean it's going to happen again. But the reason that was is because Facebook is who it is in the advertisement and the click funnel and the lead generation space. They are king. It's almost like worrying about Google getting search traffic. They're probably going to, when you wipe your nose with a Kleenex, you're not wiping your nose with a Kleenex. That's a tissue paper. You're just naming the item, the brand that is most recognizable with it, which is a Kleenex.
Yeah.
Soda crackers are not Ritz crackers.
Yeah.
They're soda crackers. But, there's so many brands that are so prominent. Grab me a Clorox wipe.
Yep.
Things like that. So I have a feeling that
I'm a Lysol guy, if I do say so myself.
Yeah, I think
But I get the point you're trying to make,
I
right?
just realized they make Lysol and Clorox. S.C. Johnson, a family company. But I think they're that recognizable in that space. And so when things like that happen to companies like that, as Meta has proven and did prove, it might be a good idea to put money to work in that space.
Well, I was just thinking, I mean, if you're bullish on Nvidia, you're bullish on AI, you already look at them as the king of the hill in the category. And we
got the Blackwell AI chip product that still hasn't been released.
I mean, if they're down 10%, I look at that as a total value play to get something on discount. And obviously, it looks like from their after hours, other investors
they're probably getting picked up a little bit.
Are thinking and feeling the same thing. So overall,
shocking it's happening after hours.
Yeah,
because you can't trade, but they can.
Yes,
they're gonna let all the retail bleed out of it. And that, I mean, again, follow me on social media, on Twitter. I posted that exact mantra of what's happening on that today.
Well, and I want to get your take on this, right? Because a lot of people see some rotation out of things. There's a lot of volatility going into September.
Don't tell me there's a rotation out of stocks into stocks.
There is.
Oh.
So I saw this. This was the Kobayashi letter situational take, and I wanted to get your thoughts because I know you won't always agree with a lot of what they're saying, but curious on the overall kind of broad stroke of what they're saying. Stocks are dropping like the big tech bubble has popped. Oil prices are falling like we are entering a recession. Gold prices are falling like rate cuts got canceled. Bond prices are falling like inflation is on the rise. Natural gas prices are falling like there's no demand. Falling like there's no demand, and crypto is falling like risk appetite has disappeared. What are your thoughts on that sentiment? They're acting like they're very confused by everything that's going on in the market. Is it that confusing?
I think it is if you don't know what you're looking at. Yeah.
So break it down.
They sound like they're finally being honest. Not a huge fan of that publication. I feel like whoever is behind it has no idea what they're talking about.
Who is behind it?
There's a lot of things in there that are a pretty far stretch.
Okay.
Like the tech bubble popping. S&P still up as of market close today, I think 15.9% year to date.
Yep.
So that's not really something I would be concerned about.
Oil prices falling like we're entering a recession.
So rising in oil prices is inflationary. A pullback in them is deflationary, and that's the period we're going through. So that's pretty normal.
Yep.
And I don't see any of the other items that they're touching on being accurate. Bond prices are falling because rate cuts are coming, and bond traders don't want to get caught with their bonds being called with their pants down.
Yep.
So again,
what about natural gas prices falling like there's no demand?
Well, natural gas is typically used to heat, and it's the tail end of summer. So I don't understand why that would be a metric to track. I get oil prices, but oil prices are pulling back from kind of high numbers. I think everybody would agree gas prices were going up over the past couple of years, not down.
What about the pullback in gold?
Gold has been on a run for the past,
right?
Yeah.
So that's somewhat
that's
necessary and due.
Rotation, yeah. Yep. Gold is a boom bust commodity.
So if you were to respond to their sentiment and accuracy of their judgment, what would you say about the Kobayashi letter?
It's pretty shitty.
Tell me more.
Yeah, just like bad. Like that is so just in one to be so wrong, but like talk like you're coming from a place like you know what you're talking about. Anytime I see that, that means like you have absolutely no idea what you're talking about. Their base, I don't even know what their base case is. Like what tech bubble?
Yeah,
I don't get it. Earnings have been pretty good and pretty strong. Even today after our Zscaler. Right now what's hard is companies are giving weaker than expected guidance, but they're beating on earnings.
Yep.
So I'm not really seeing a weak economy, and I don't know how you have a weak economy or a bubble when the market's up. GDP was just announced last week, and that was good. Even with the deflator, it actually increased it. So it's just those type of letters are really damaging to investors because it plants seeds in their mind like things are going wrong or like, does this person know? And
Yeah, it seems a little misleading to me.
Would overcomplicate something that's really not that complicated. I mean, I like the complicatedness of it because it gives me a job, but overcomplicating it and making investors kind of guess or fear baiting or like, and I would say there is probably engagement farming to earn money.
Yeah.
I just think that's
Does it feel like it's just seasonal correction and pullback leading up to the election, leading up to the rate cut drops?
I don't know if it's seasonal, but I feel like it makes sense for the environment and
based on the setup.
Yeah.
Got it.
I think people are just digesting. We're getting really close to a big change of potential policy, who's in charge, what does that mean for the next 3 to 4 years. So I think people are bracing for that, and they're also waiting to see what happens when the first rate cut happens. I think, like I said, I think I said this prior, even though I believe in the long term, stocks will run just like most analysts do. Remember that.
Yeah.
They've already come out and boldface said it. They also probably would tell you right when it happens, there'll be volatility because people will immediately sell out of other stuff and get into things. So those are those rotations. Those are those downward days that you see. Not everything goes up every single day. Nvidia is down 10% today, but I have clients, including yourself, that have over 100% rates of return in that stock. Why do you have that? Because we've been just consistently buying it, and we buy it all the time. And not every single time you put money in, but when it makes sense, we buy it.
Yeah,
especially on pullbacks. So it just, you can't get those kind of returns when you're kind of over here shaking your 8-ball and seeing what dice floats up.
Yeah,
that's where people get caught in looking for the next best thing, or almost like the saying, if you look for bad, you're always going to find it. People constantly looking for, okay, when is the next recession? And they just have to find one thing that sparks that interest, and then they're down the rabbit hole and they can convince themselves of anything. That's the scary part about retail investors. It's also why investors that work with financial advisors like us and trust us, or professional traders like myself, make a lot of money. It's not hard. It's just people overcomplicate it like they do most things.
Yeah. I saw an interesting article recently about the biggest threat to the U.S. economy is the declining U.S. fertility rates.
I don't agree. Just debt.
And so tell me more on that in a second, but let me give you some context here. So, and this was kind of specific to like retail real estate, commercial real estate investments. So let me clarify that a little bit. And a lot of people saying, well, Amazon, right, Walmart, a lot of the online shift in consumerism is a threat to physical retail locations, big box, things like that, but also just retail in general, stating that the decline of U.S. fertility rates and having less of a population is a threat to consumerism in the future, being that nearly 2/3 of our economy is tied to consumer spending. Figuring out how to incentivize, and we've been seeing declining populations, right? Really all across the world. But even then, you've seen Bill Gates and World Economic Forum and others talk about depopulation being a good thing, that we need to... I saw Trump recently came out on IVF and saying that he wants to support more people having more kids and things like that. So
I just don't think there's been an
interesting discussion.
Like
there
the child tax credit was the first thing.
Yeah, you're right.
And that really, since then, they haven't really redone. It's not the wheel, and they're treating it like that. Like, hey, we did something. It actually works. We don't need to redo the wheel. The wheel is the wheel. Incentives for people to have kids, because kids do create revenue streams for businesses. Yeah. I'm preaching to the choir right now across from me, but your spending goes up,
right?
And that spending goes to companies. Those companies make profit, so on and so forth. It also puts another person into the economy that can potentially, in the next 18 to 24 years, become a part of that, and then give back on top of, and then rinse and repeat and rinse and repeat. And then we have a successful addition to the economy from an individual standpoint. The problem is when you have things that are trending, like being transgender or gay, which is a trend right now. All the stuff that's going on, it takes away from the focus of kind of the nuclear family, which is what we
the nuclear family has been under attack for quite some time.
Which is what we were, and every time that we're in a successful run as a country, that's not saying you can't be gay and not saying you can't be transgender, but when that's not the focus, when the focus is the family, a productive household, having 2 to 3 healthy kids that are going to school, that are being groomed to be productive members of society, that gives back to society in a huge way, not only in the short term, but in a long-term way.
Well, yeah, it becomes an asset to society instead of a liability to society, which is ultimately what a lot of our social programs and programming has shifted a lot of attention to. And if anything, it's rewarding people for not doing the right things, and it's allowing the other people who are doing the right things to have to bear that burden, which is creating very interesting social and cultural dynamics, which obviously tie into financial dynamics as well. So I just thought that was interesting to see around, one, the kind of slow of the fertility rates in the country. Now, mind you, we've got a lot of people coming over the border, so that doesn't mean the population is going to continue to decline as a result of that. Maybe it will, I don't know. But when you don't have incentivization to be, contributing, producing parts of society, and you just expect bigger government to come in and, create some of the backstops that most people in the past have had to create for themselves. Now, that to me, that seems like potentially just a bigger issue of the wealth gap widening even more and more.
Yeah, and what will... someday those people eventually wake up that can, and they say, look, I've been voting blue or voting this way for my whole life, and things keep getting worse. So I wonder if I need to do something different. And I think some people are going through that right now. And some people never come to that conclusion.
Yeah.
Republican Party is not perfect. Neither is the Democrat Party. But the fact that the choice that we have kind of coming up is, candidates aside, it's really just policy. And the policy that's being pushed by one side, I actually know what it is. The other side doesn't want to share what it is, wants to tell after they get elected, doesn't want to do press conferences, looks like an idiot when they do interviews, clearly is lying about things that I care about. Like, I don't know if I can call it stolen valor or whatever, but talking about doing stuff in the military that you haven't done, or exaggerating to imply that you've done things without actually saying that you have or haven't. So a lot of that stuff, to me, is huge red flags. And I'm not saying that Trump hasn't done stuff in the past. That doesn't make him he's not a perfect individual either. And anybody that looks at him like that, I think you got a little weird for that. But candidate to candidate, he's 100 times better. And they're both politicians at the end of the day. They both got skeletons in their closet. But I would happily count Trump's versus Kamala and Joe Biden and Tim Walz and all that stuff. Career politicians versus somebody who just is a regular person, a regular businessman, doesn't really need a ton of anybody's money, minus for his campaign, obviously. Those cost billions of dollars to run. So there's just a difference in the candidacies right now. And the thing that stands out to me the most is we have like somebody who's bold-faced lying, completely putting on a show, a real chameleon, versus somebody who's kind of, is he the perfect person? No. But he's the same damn person he was 8 years ago. I mean, he hasn't changed a bit. So at least I know what I'm getting.
Yeah.
And I don't know what I'm getting with the other party.
Yeah, I mean, if they said, based on everything the media has been saying and all the negative coverage they've had on him for so long, if he was going to do all this bad stuff, the media tells us that he's going to do, he would have done it in his first 4 years. And if she's going to do all this great stuff that she's claimed she's going to do day one, she would have done it in her first 4 years as well, right? So I think to the defense of all candidates, like the media is really the big problem here, but it was interesting to get some independent polls this week recently, and 2 from each side of the aisle. One with Elon Musk, and obviously I would assume that his followers
Skew right.
and are going to skew and lean right. And how many people contributed to the poll? It was because he took an independent poll.
Over 100 million, I think.
It was, significant.
Yeah, a much larger data set than
any before.
Yeah.
And it was how many Trump and how many Kamala? Do you recall what the final poll was?
I think it was about a 65-35.
65-35.
Plus or minus. And those could be completely off, but I'm guessing, I think that's what it was, 65-35, somewhere around there.
Yeah, how many people replied to Elon Musk's poll between Kamala and Trump? I just want to look this up really fast. I'll have to see if I can see how many replied, but I know that. So I was like, okay, that makes sense. Elon Musk has more conservative people following him, so that's a little biased, I'm going to assume. And then I saw Mark Cuban, who has outspokenly supported the left and his disdain for Trump. And his poll, which had millions of people respond to it, was 67% Trump and 33% Kamala Harris. And you won't know is even funnier was he then said on a reply to the final poll, well, I would like to make sure that all the people voting here are actually real people and not bots because it's skewing the results. And then somebody said, oh, how insane would that be and outlandish to ask for verification of the people who are voting for you are actually valid individuals, right? And I think he ended up taking the tweet down. I couldn't find it when I was looking for it today, but kind of backfired on him a little bit for voter ID. Who would have thought that asking for just validation that you are ethically able to vote based on the rules of the Constitution and the election laws?
I would just ask anybody, when is the last time you voted in another country's election on vacation?
Never. I mean,
never.
Countries
it's so wild that people are like, oh yeah, no, that's totally fine. It's not normal. It's not fine.
No, those that are doing it, let's just call it what it is.
It's
I don't care if you're on the left or the right.
Voter
you
fraud.
are doing it to commit fraud.
Yes. If you're a Republican does it, it's for fraud.
100%.
If a Democrat
Doesn't matter
I don't
who you
care
are.
who you are. It's fraudulent.
I'm looking at.
You don't live in the United States.
So countries that require voter ID, and there's too many to count here.
Hundreds.
Yes. And
including the UK.
And these are some of the most some of these are like ones that I would be like, oh, these are questionable governments that run these.
China, I know for sure requires it.
Yeah, and it's one of those that I'm looking at and going, the United States is the only mainstream first world country, let alone second and third world country, that is literally not choosing to have voter ID as a normal part of our process. Yeah, I saw that Abbott just decided to get his attorney general in there, and they scrubbed a bunch. I think they removed over 1.1 million voters rolls that were either dead or illegal.
And most of them were dead. Did you notice that?
Yeah. So that was kind of interesting and odd. I've seen what's his name from? Was it James O'Keefe? On this Act Blue
that got opened up,
and a lot of now that's going into the Supreme Court of all of this money laundering going.
How did I make $255,000 with donations? I don't even have that kind of money. I'm a retired 87-year-old,
and he was going around knocking on doors, asking them about their donations. Like, I didn't do that, right? So again, I think just wanting to be able to, whether it's trusting our government and the election process, whether it's trusting in our financial systems, right? Whether it's trusting in the real estate ecosystem, that the opportunities within this game that we're all trying to play and utilize to get ahead are actually free and fair in the way that we talk about them, is something that more and more people, I think, are just waking up to. They're asking more questions. They're not taking everything at face value. They're hopefully starting to see past the clickbait and the headlines that pull into the attention. And what we're seeing is this platform of free speech is giving a lot of people the freedom to get exposure in a way that owning the other media companies and corporate media ecosystem has squashed and controlled for so long. So yeah, thank God for that. As we close out today, I wanted to ask a question that I saw. This came in per Smart Asset. And somebody asked a question of how much do you need to retire comfortably?
More than 3 million. I already know the number.
And it said you can probably retire in financial comfort at age 45 if you have $3 million in savings. So I'm curious what you would add to that, respond to that, change with that.
That's not paying the type of lifestyle that I want. That's $150,000 a year of passive income, which is great.
Well, let's say for the average person that $150K is enough for them, and they're and they're of retirement age.
I responded to that post.
You did?
Yes.
Okay.
And I said, if $150,000 of starting annual passive income pays your bills and makes you happy, then yes, that is a fine number. 5% withdrawal rate, folks. It's not a hard deal.
Yeah.
In the stock market, every $1 million is $50,000 a year of passive income.
Okay.
Pure and simple. So when people get to the retirement desk with me and they have in California, $1.4, $1.5 million, and they're like, I want $30,000 a month. I'm like, where's it coming from?
Yeah. Can you show me?
Yeah, because it ain't coming from
Point me in the right direction.
No. And so a lot of people, you got to save a lot to make a lot.
So let's say, though, somebody had $3 million to invest.
If
you're saying if they put it in an annuity or...
Not even an annuity. A 45-year-old, that's too young for an annuity. You'd put that in the market. You'd have a balanced portfolio. Maybe sometime in your 60s, mid-60s.
Go into an annuity.
Yeah. Or maybe you take a portion off in your early 50s and let it defer for 10 years and then turn it on so you can take some heat off your portfolio long term. But to me, it definitely, you better not have $3 million in savings. I will absolutely slap you through this microphone. That's dumb. It's way too cash heavy.
Yep.
Have it invested. Can't be afraid. Yeah. You would have to be okay with $150,000 a year of passive income, but that's the cheapest $150,000 of passive income you could get. Couldn't you get more income from $3 million of real estate? Matt, ring the fuck yes bell. Of course you can.
Yeah, absolutely.
But with a lot more work.
More work, more risk.
Expenses.
Yep.
It may balance out.
More management.
You may actually net more still with the real estate, but for a lot more work. It's a very, I will say this, and I hope I don't make any enemies. Matt knows I mean it well. Stock income is actually truly passive income because you actually have to do nothing. I mean, you literally have to, because you're in the assumption you have a financial advisor. You are literally doing nothing.
Yep.
Real estate income is passive when it's passive. But there's a lot of times when it's not. Even if you have a property management company, you still have to make decisions on expenses. You still have property taxes to pay. You have all this stuff to maintain. And then you have a renter. There's no renter in stocks. You just get it.
Yep.
There's a lot more volatility. We can go on down that road a different day. But 150K at 45, that can make a lot of people really happy. I would say that, yes, that would be a lot of people's goals. If I had $3 million and I was 45 years old and that's all I had to my name, I would invest it and probably work some more.
Yeah, for sure. Getting that money continue to work for you.
You wouldn't have to work a long time.
Yeah.
You may only have to work 5 to 8 more years. You could double, almost triple that in that amount of time. But I got to have more money than that. I don't want to live on $13,000, $14,000 a month. That's like my expenses right now.
Yeah.
So I don't want to just live on that.
Well, if you are feeling behind financially, just remember, here's some interesting statistics. The average 6-figure earner is 35 years old. The average homeowner is 36 years old. The average entrepreneur is 42 years old. And the average millionaire is 62 years old. So don't let social media, don't let the world, don't let your friend, don't let your neighbor make you feel like you are behind the 8 ball so far that you can never catch up, because it's just not true. Mm-hmm. But you do got to start focusing on whatever the plan is. What goals are you trying to achieve? When are you trying to get there? And what's the plan, and executing on that plan instead of just hoping and wishing and or feeling sorry for yourself. Because I hear and see a lot of people who tell me all these great things that they want to do and achieve for their life. And then I ask them how they're actually going to do it or what they're actually doing right now to move the needle forward on it. And most of them can't clearly communicate that to me. And so what to me it shows is they're just hoping and wishing without actually putting in the work to get real change and significant results in their life. And as you and I both know, I mean, wealth building is slow. It's a crock pot. But once it starts heating up and those ingredients really start coming together, it can get pretty nice.
Yeah,
it can get really tasty.
Absolutely.
And that's where, if you're not giving yourself the ability to at least be in the kitchen, to be putting the recipe together, to put the ingredients in the crock pot and giving it time, that's step number one. And it can be something small. I think one of my early mentors really like pounded this into my head was big things start small, and small things over an extended period of time add up to being a big thing.
Yep.
And if all you do is look at trying to get the home run right out of the gate, one, it's daunting. Two, it's discouraging, because as you get in the trenches and really realize what goes into that, you go, oh shit, there isn't these lightning in a bottle moments that I read about or I see, or that I hear the overnight success story being really 20 or 30 years. It can be discouraging for people, so they don't start.
Mm-hmm.
But if you're under 50 and you are planning to be healthy, grow your wealth, and consistently bring value to the marketplace, you can create and unlock pretty much any kind of lifestyle you want.
Agreed.
And even if you're older than that, there's ways of getting around with certain plans and approaches to getting that too, right?
We do it with people all the time.
All the time. So appreciate you guys tuning in each and every week, and we will see you guys in next week's episode.